Points lower. It's not cracking, not as yet. 9941 is where the Nifty is at this point in time. We started at 11 with about a 30-odd point cut, and another 3-odd point cut has been added onto it, so not really much change. Manisha is now joining in with essentially a roundup of all that's happening in the commodity and currency space. Manisha, good morning. Over to you.
Thank you so much for that, Prashant. And this is one sector which definitely is doing well, especially for the gold prices, where you have seen the safe haven buying come in. So it's near one-year highs when you look at the global markets for gold, and we are trading at around 10-month highs for the Indian markets as well. Silver also is trading at a 4-month highs, and if you look at the bullish bets, those actually have been climbing. Net longs now are at a 9-month highs. The ETF holdings are at a 7-week highs as well. So everywhere that you look, you are looking at some traction, whether it's in the futures market, physical, ETF as well. Gold is looking at that buying attractiveness into those markets there. Well, you also have seen the geopolitical concerns come in from North Korea, the expectation that you wouldn't see another rate hike from US this year because inflation still seems tepid. And apart from that, the US dollar weakness as well has been supportive. While most of the Asian currencies actually are not doing so well, it is the Chinese yuan trading at a 15.5-month highs. You have a GBP at a 3-week highs. The Korean won, of course, has seen a slide, but other high-yielding currencies seem to be doing well. And what is also doing well is the commodity currencies. So whether it's the Australian dollar or a Canadian dollar trading at a 2-year highs definitely has been supportive. But getting in strategies then, and for that we're joined by Teague Nansekar. Nansekar, hi, good to have you. What is your sense now coming in for gold and silver prices as we've taken over the key psychological levels? Are you looking at further gains?
Absolutely. I think, the way it has broken 30,000 in the domestic markets, though it's just a kind of a benchmark, but the international prices matter more. I think the way it's looking is that, gold and silver both could be heading towards medium-term resistances, which is around 1375 in gold and 1850 or thereabouts in silver, which is like another 500, 600 rupees in gold from present levels, another 1,000 or 1,500 rupees more in silver. Like the factors you pointed out, till there is a clear resolution of the North Korean crisis, we're not going to see any abating of safe haven buying. So that, I think, is going to clearly add tailwind to this move, and we should be seeing medium-term resistances being tested in the near term.
Sure. And it's not just the precious metal space, because when you look at the industrial metals as well, so whether it's ferrous, where you have the iron ore price is up 3%, steel has hit a fresh 4.5-year highs, nickel is trading nearly 3% up in the Shanghai markets, copper is at a new 3-year highs. So everything in the metal space as well seems to be breaking those upside resistance levels.
Absolutely. I think, the only danger is that, technically extremely overbought. So there could be some kind of a profit taking, but yet the rally is expected to continue because both the demand and supply side continues to add support. And the recent fire incident on steel furnaces is kind of adding concerns that there will be more such restrictions on steel. So that is further sort of adding fillip to this whole metal market rally. But technically, the only worry is that there could be some profit taking. So at these levels, you should have a little bit of caution, but yet still keep buying on dips with a stop loss.
Just before we let you go, a quick word on the currency strategies as well, because with the way the dollar is behaving and we are looking at a lot of choppiness and the Indian currency futures as well, are you recommending something there?
Like you said, it's quite choppy at this point in time because the fundamental triggers aren't there for any kind of a big move to happen either ways, because if it appreciates, I think the central bank buying is going to come and limit the appreciation. At the same time, with the way the dollar is behaving globally, it's unlikely that we'll see a sharp depreciation either. So it's going to be contained in a broad range, which is kind of stable and helpful for both the economy and traders.
Okay, all right, Manisha as well as Ganeshekar, thanks very much for joining in, taking us through all of those commodity strategies. Just a quick word on the markets. From the broader markets, though, there are a lot of stocks, or rather the index itself, which is declining. We have many specific stocks which are gaining. So I just want to point out something like Kamath Hotels. That one is up around 10.5% odd. Raymond is shot up around 4.5% odd in today's trading session. Bombay Dyeing has been on a tear since last week, and that one is seeing no sort of, respite in terms of at least the gains, rather. So that one is up around 3% odd. And we're seeing Walcott, which is up around 3% in today's trading session as well. So these are a couple of stocks which you just need to keep on your radar in terms of stocks which are seeing momentum in what is still quite a sluggish market. We'll take a break, but up next we're going to be discussing market technicals. Ashwini Gujral will be with us next. Stay tuned.